Today, Bitcoin rebounds after lawmakers get plans for crypto regulation back on track. And head of policy for the Bitcoin Policy Institute, Zack Shapiro, breaks down the crypto regulation bills currently sitting in the House. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices and several related stocks rising this morning as Congress's Crypto Week gets back on track. Markets stumbled last night after the House failed a procedural vote that would bring key crypto regulation bills up for consideration. Republican lawmakers who previously voted no now seem to be on board, and prices are rebounding. As of noon Eastern, Bitcoin rose to $119,000, Ether climbed to $32.46, and Solana's Sol token rose to $168.54. Let's take a look at some crypto-focused stocks. Circle jumping 12.5% and Coinbase gaining nearly 3% after both closed lower in the previous session. Ether Treasury stocks continued their rally, led by BitMine, which surged 19% as of midday after Peter Thiel bought a stake in the company. Others also climbing, including SharpLink, up 24%, and Bit Digital, which gained 15%. Okay, let's talk more about Crypto Week in Washington, D.C. As we mentioned, cryptocurrencies and crypto-related stocks seesawed after the House failed to approve a measure to bring two key pieces of legislation up for consideration: the stablecoin bill known as the Genius Act, which the Senate passed last month, and the far more complex market structure bill known as the Clarity Act. Industry players, including Coinbase, hope to see both of these bills move forward together, but their failure to do so was a disappointment to much of the market. Hours later, President Trump said in a Truth Social post that he'd met with House Republicans who kept the bills from advancing, that they'd changed their minds in that meeting and were prepared to vote to move the legislation forward. And then just this afternoon, the House approved the procedural vote to consider crypto regulation. Stay with CNBC.com for the very latest. Next, House Financial Services Committee Chairman French Hill joined Squawk Box this morning to give his take on the Republican opposition that led to yesterday's failed vote.
I think some members in the House really would like to see Tom Emmer's work to legislatively block a central bank digital currency being issued, make sure it's turned into law, meaning that the bill doesn't just pass the House and then go over sit in the Senate and not garner 60 votes and then become law. So that is one of the core reasons why they wanted to talk to the Speaker and have some more discussions with President Trump and how to make sure that they could get that bill into law.
All right, sticking with the latest on Crypto Week on Capitol Hill for our main story, Crypto World's Talia Kaplan spoke with attorney Zack Shapiro, head of policy at the Bitcoin Policy Institute, about the developments in D.C. and why he thinks Congress should focus on passing the Genius Act.
It's Crypto Week on Capitol Hill, and yesterday several crypto-related bills failed to clear a key procedural hurdle in the House. What's your reaction to all that chaos we saw on Capitol Hill yesterday, and what do you think this means for crypto regulation? What happens next?
I think, to be honest, this is a bit of a failure on the industry's part to play this the correct way politically. I think it was a mistake to have all three of these bills voted on at the same time, as opposed to starting with the Genius Act, which is a sort of important must-pass and what should be uncontroversial bill to provide a regulatory framework for stablecoins. And then I think it's a failure to educate some of the key folks involved. I think there are some Republicans who feel like they don't really understand what this legislation is about, and the crypto industry needs to do a better job to fix that. And I think that there are some members, especially of the Freedom Caucus, who are a little bit confused about the difference between a private stablecoin and a central bank digital currency, and that we as an industry need to do a better job describing why those two things are distinct and should not be treated the same way. But I think that the future of crypto legislation really does sort of hang on whether we are able to get the Genius Act specifically passed into law or not. If we do so, I think that will provide momentum for future legislative efforts. And I think if that doesn't happen, it's going to be very hard to convince House leadership to take up crypto legislation in the future.
And we're going to dig deeper into these three bills in just a second, but the measure had been widely expected to pass, and the failure of the rule yesterday was a rare case of House Republicans refusing to take direction from President Trump, who urged them to vote yes in a post on his Truth Social site. What does that signal to you?
Yeah, I think it signals sort of, I think there are three reasons that didn't happen, and each have a different signal. One of them is the decision to put all of these three bills together, which I just think was a tactical mistake. I think they should, a vote on each one of them might have gone differently. I think the second is, I think there are sort of moderate Republicans who don't feel great about the way that the big, beautiful bill went through and political pressure they received there. Maybe, they don't feel like they understand these crypto bills well enough, and they just need to kind of wrap their mind around them a little bit more. And I think there are efforts underway to do that. And then the third is, frankly, there are some parts of the Republican Party that I think have fallen prey to either misinformation or in some cases sort of borderline conspiracy theories about what stablecoins are and how they operate. And I think that a couple of the defections on the right are just because of that sort of misinformation.
Now, as you mentioned, one of the three bills in limbo after that failed vote is the Genius Act stablecoin regulation bill, which, as you noted, the Senate passed last month with some Democratic support. You posted on X yesterday that Congress should focus on passing the Genius Act. Why do you think that should be a focus, and what would change for the industry if that stablecoin bill becomes law here in the U.S.?
Absolutely. So I think there are two primary reasons to pass the Genius Act now. One is that it's just good policy. There's some concern among Americans that stablecoins are not adequately backed by dollar or dollar equivalent reserves like treasury bills. The Genius Act would provide consumer protection to make sure that if you have a stablecoin, it is redeemable on a one-to-one basis for dollar in a full reserve model. It also provides some insulation from White House politics between administrations for companies or financial institutions like banks that want to use stablecoins, which are frankly more efficient ways to move dollars than the legacy banking rails or SWIFT or FedNow, that they can go ahead and use those rails and that the rules won't change just because there's a new president in the future. And so that's really important. And it's also really good policy because stablecoins are good for the US. They provide a very large source of demand for treasuries, for US sovereign debt. Our Treasury Secretary, Scott Bessent, has estimated that they could provide at least $2 trillion of demand for U.S. government debt, which is really helpful in keeping yields down, which is a real priority of this administration and good for the dollar. And then it proliferates dollars around the world to places that will, A, provide demand for dollars, which is good for the status of the world reserve currency, and B, is really good for people, especially in authoritarian countries who don't have access to U.S. bank accounts and for whom it's very dangerous and difficult to get access to physical cash. So it's good policy. The other reason to pass it, really specific to the digital asset in crypto industry, is that it's going to be very hard to pass any kind of crypto legislation if we don't get this one through. This should be the least controversial, sort of most modest piece of legislation. It's easier to wrap your mind around stablecoins than it is on the difference between a utility token and a meme coin and a security and a commodity. And stablecoins, I think, other than Bitcoin, are the only part of the digital asset industry that so far has found robust product market fit. And there are just fewer regulatory issues around Bitcoin. And so if we get this bill passed, I think that helps create momentum for other strong industry priorities like a market structure bill and amending the securities laws to do all sorts of exciting Web3 stuff. And conversely, if this Genius Act falls flat, if we can't get this across the finish line, it's going to be very hard anytime soon to convince sort of House leadership or Senate leadership to really take up crypto legislation. So I really do think the Genius Act for the industry is a must-pass bill if we're going to move forward with any of our legislative priorities.
Makes sense. Now, focusing on the Clarity Act, that bill would establish rules for whether an asset is regulated as a security by the SEC or as a commodity overseen by the CFTC. What do you think about this bill? The biggest legislative priority for Coinbase is that market structure package. In fact, the crypto exchange launched a six-figure campaign last week urging Congress to pass the Clarity Act in an effort to get clear rules for crypto. Do you also think the Clarity Act should be a top priority? I know you mentioned Genius Act should definitely be a priority, but what about the Clarity Act?
I think the Clarity Act or a similar market structure bill should be a priority, right? Maybe not this week in the same way the Genius Act, I think, really does need to pass now. But we saw in the previous administration that when you don't have clear rules, that can be abused by regulators who don't like the digital asset industry to do regulation by enforcement. And instead of putting out clear rules of the road, when large companies like Coinbase ask for those rules of the road, instead they're met with subpoenas and Wells notices and civil complaints. So really important for the industry. And then, there's one part of the Clarity Act that I actually think is maybe substantively the most important piece of crypto policy out there, which is Section 110 of the Clarity Act draws an important distinction between non-custodial crypto technology, which is just code, it's technology, and a money service business or money transmitter, which is a regulated type of financial institution. And the line between those two things is currently being blurred in two federal criminal cases against the developers of Tornado Cash and Samurai Wallet, where the current illicit finance law presumes that if you have an electronic transfer of money, there is a financial intermediary, like a bank, in between that's facilitating that transfer, because that was necessarily always true before the advent of blockchain technology. But with blockchain technology, you can have peer-to-peer electronic transfers where it's really one person directly transacting with their counterparty without a financial institution in the middle. There's just code. And so we're at this critical point in sort of the jurisprudence and what judges decide about crypto cases, whether they are going to sort of update the laws or recognize the fact that we now have digital peer-to-peer transfers versus imputing a financial institution where there isn't. And then, as we see in these criminal cases, holding the software developers that just make neutral tools accountable. And so there is that particular part of the Clarity Act I really do think is almost sort of like a policy emergency that we need to pass something like that.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.